The Rubicor Group, it's one of Australasia's largest recruitment groups. We provide recruitment services across a range, so that covers temp and contractor. It also covers payrolling, perm recruitment services, as well as some human capital solutions. So that would involve organisational development, training, psych assessments, assessment centres and things like that. And we operate out of 3 countries. We're in all the major capital cities in Australia. We operate out of Wellington and Auckland in New Zealand and in Singapore. And we go to market with a network of 19 specialist brands, and we cover 5 sectors with those brands. And we service a very diverse client base. So we've got more than around 1,500 clients. That's all of government, so federal, state and local government, very large corporates, all the way through to SMEs. We have around 245 employees in our business, and close to 200 of those are revenue generating recruitment consultants. We have about in excess of 2,500 on-hire employees, and those are the people obviously that we employ and then on-hire them to our clients in order to service them in those various sectors. So very much key to our proposition is our multi-brand strategy, and how we use that strategy in order to provide a differentiated client offering and provide value to our clients. Rubicor's really come from a near-death experience, and how that came about was Rubicor's it's an aggregation play in the recruitment space. A lot of acquisition activity happened between 2005 and 2008. The market was absolutely running, and there was a lot of earn-out payments paid as a result of the performance generated during that time. A lot of the funding to meet those payments came from debt. When the GFC hit, the earnings got severely decimated, and Rubicor became a severely distressed company, and continued to be so until July 2013, whereupon Rubicor did a significant debt restructure and was able to extinguish debt of around 96 million in exchange for 7 million, and thereby realising an 89 million gain on the debt forgiveness. So essentially, really, where we are right now is that we're back, we're open for business. We've got a new lease of life with a new stage following that restructure, and we've also, as a result of that, then significantly restructured the operations as well. So we've tidied up a whole lot of things. We've rationalised some of our brands. So we've concentrated 4 brands into 1. We've closed 3 brands. We've started another 2. We've reduced our rental premises footprint. We've co-located brands, so reduced that from 23 down to 17. And we've also streamlined our operational management. So previously each brand had an MD. What we've done is we've taken 12 brand MDs out of the picture, replaced them with 3 group MDs responsible for a number of brands. And then in this last financial year, we've stripped out $2.7 million of costs across a number, in fact all cost categories. And then in addition to that cost reduction, we're actually seeing improving trends over the last 18 months at the GP line and at the underlying EBITDA line. So I think really where we are now, we've done our restructuring, we've got the right platform and stability in place in order to move forward and to pursue our growth initiatives. We're now in a position where we think we're extremely well placed. We have the right platform in place with that stability. We've identified a number of key strategic initiatives that we are pursuing, and these initiatives are really independent of external market conditions. So, there's a lot of value inside the group that we're heavily focused on unlocking. So one of our strategies is obviously an organic growth strategy where we will continue to invest and add to our consultant headcount. Obviously that's a way that we grow our GP, our top line. And we'll also continue to optimise the productivity and the billing performance of our consultants, which is obviously another another way to make sure that we get better growth down in the bottom line. So we've brought in a GM People and Performance to help us attract the best talent, retain the best talent, and obviously help us optimize our bidding performance. We're looking at some new markets, so Asia is a key growth area for us. We have a Singapore operation. We're going to continue to invest in that operation, but we're also going to be opening up a second office in Asia in FY15, and we've already signed a number of supply agreements covering Singapore and Hong Kong. In terms of the organizational development space, we're establishing a national footprint for one of our brands that operates in that space. They're based in Adelaide, got a great reputation in Adelaide. They've got all the IP and the infrastructure support there, and we're complementing that with a sales force on the Eastern Seaboard, and we've added people in Sydney and Melbourne to achieve that. In terms of new sectors, the health sector is obviously a massive growth sector that we haven't been playing in, so we've established a new brand called Insure Health in July, and with a focus on providing nurses and doctors, allied health workers, and also supporting the pharmaceutical industry. And in their third month, it's pleasing to note that they've turned a profit. So those are some of the initiatives that we're doing on that front. We also, as I say, key to our strategy is to unlock value, and we're looking at technology as a big enabler to help us do that. So at the moment, we're implementing an enterprise-wide database platform across all of our brands, and this is obviously going to give us some significant opportunities both in the front office and the back office. So it will enhance obviously our visibility of our clients and our candidates, allow us to reduce our support costs in a significant way, and also help us maximize our whole collaborative sales approach. So that's it really on the organic and greenfields front. In terms of acquisition, we're on the lookout for acquisitions that we can bolt on, things that we can integrate into our existing footprints. It'll be done very differently to the way we've done in the past, which they were standalone businesses. Here what we're looking to do is to add value by taking out cost, getting economies of scale, leveraging off our client and candidate profiles in order to drive value that way. So there's a lot of things we have on the go at the moment, and I think we're all pretty excited in terms of the turnaround opportunity that we have with us, and I think the achievements that we've achieved to date. Obviously there's a hell of a long way to go and a lot of work to do, but certainly on a comparative basis with our peers, it's feeling good for us, and as I say, we're well placed to execute on our strategies.